morning, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 762nd video, baby. Yeah. 762 videos teaching you how to view these markets, how to gauge charts, how to put technical analysis ahead of all other news, and we will continue to put these videos out. Hi, I'm Oscar Carboni. I've been trading for 29 years, used to be down in the pits in Wall Street, and here I am now to help you traders with these rough and tumble markets. A lot of you OMNIs have been following me, and I put videos out last week. In those videos, I said, do not get out of your 401ks, that we are going to gain some strength, that we are having a pullback that was basically given a real shot in the arm by that S&P downgrade, and that really sent us into a tailspin. But there are markets that are doing things at the same time that the U.S. stock market came off that tells me to tell you that we will hold and go higher. Now, I showed you many examples in my last video last week. I left it out there from Wednesday night all the way through Friday. What happened, traders? We went right up on Thursday and Friday. Now, as we know, futures trading is extremely risky and can cause you substantial financial loss, and that futures trading is certainly not suitable for every trader out there. But if you understand risk capital, you have risk capital to lose, and you place your stops first, we got a video for you. This video is being filmed on Sunday for Trading Sunday through Monday. That is August 15, 2011. Traders, right before I get into the video and start to speak about the things on my board, remember, this Saturday at the end of this week is our live seminar in Vegas. It's free, and we want you, OMNIx, to come out to Vegas and join us. It's at the Marriott. Make sure you come to our site, livewithoscar.com. Click the big green banner at the top and reserve your free seat this weekend in Vegas at the Marriott. I'm going to be on stage where I will do a question and answer phase with a lot of you OMNIx, and I will be there to help you increase your knowledge about the analysis behind markets and how to use it to get in and out safely. All right, traders, so what's on the board? The 200 bar moving average and the weekly charts. S&P, Dow Jones Transportation Average, the 200 bar moving average has stopped cold this big drop that we were going through. The market has gained legs when you do look at the weekly charts of with the 200 bar moving average of the S&P and the Dow Jones Transportation Average. The S&P looks like it's putting in a very nice V bottom. Very possible that there is a V bottom on the daily S&P chart. The dollar index has a head and shoulders bearish formation and a 7150 projection on the downside. The euro is bullish because it has a big old bull flag on it. And crude oil right now is cheap. Traders, everything I just told you on this board is a recipe for a green OMNI. This is what I'm talking about. We've held at the 200 bar moving average since Wednesday, and the world noticed and started to buy on the weekly charts of the S&P. There is a V-looking bottom, just like the V bottom that we put in on the daily charts back in 2009 after the big crash started. The dollar index has a head and shoulders formation, which is bearish. Now, the S&P held the 200 bar moving average and the Dow Jones Transportation Average, the leader of U.S. indices, held. That gives you support. If this V bottom is a V bottom, and it looks like it certainly turned into one, that is more support. What would continue to support the U.S. indice markets after that big crash we had? The dollar index going lower would certainly be buoyant for stocks. Euro going higher makes sense because the S&P and the euro seem to travel together these days. And cheap crude oil traders, there is no better stimulus on this planet than cheap energy. Listen, my country, your country, any country can try a stimulus package. It might work in their country, but that's a small part of the globe. When you have cheap crude Everybody on the planet gets a stimulus package. Every store that has to purchase product, it gets cheaper to bring the product into their store. It's cheaper for you and I to travel in our cars to pick up the product. Hence, we can afford a little bit more of it. It is cheaper to move natural or raw materials around to factories to create the product. It's cheaper to get the product out to market. It is better or beneficial for every country on the planet to have cheaper crude. Even the countries that survive on selling it, they still will do better if the world has cheap crude. So, a recipe for a green omni, undoubtedly. Traders, I want to show you some charts behind this right now. I think this series of charts will help to put in light what I mean by the 200 bar moving average being so important here. What the V bottom looks like. Right in the middle of a video, I get a phone call. And it's one of my omniacs from Europe. Thomas, you've called right in the middle of a video. And I answered it, but I gotta get off, buddy. I'll be back to you when I'm finished with the video. I'll speak to you shortly. You've made tonight's video. Cheers, brother. There you go, happy omniac. The dollar index and the head and shoulders with the 7150 projection is absolutely buoyant, as we said. The euro with a bull flag. The euro and the U.S. indices seem to travel together, no doubt. And like we talked about, crude oil, believe me, you know this, crude oil is a stimulus. Traders, with no further ado, let's go look at the charts. Okay, traders, the Dow Jones Transportation Average deemed the leader of U.S. indices. This is a weekly bar chart, so each one of these green lines represents 1 week's worth of action. This is the 200 bar moving average. As I mentioned in last week's video, it would be extremely important. Traders all over the street would be looking at it, and if it holds, we will blast off. Traders, we came right down to the 200 bar moving average and rallied all the way up and settled by the highs. Wonderful look right there. We are back inside of the parallel channel and held the 200 bar moving average. You gotta love it. So, I think that from here, you're going to like what's coming up next. Okay, traders, the ES or the E-mini S&P weekly bar chart. This follows the Dow Jones Transportation Average. 200 bar moving average comes right across. If you'll note, we couldn't get above it last time it tried. When we did get above it, massive rally. Now we've come back to test it, got below, ran all the way back up and settled up here. Back inside of the channel, holding above the 200 bar moving average. I told you the street would be watching this. I mentioned that the street would likely get in if it held, and that is what's going on right now. So there is your weekly chart. Everything that we thought would happen in the videos we gave you last week has happened so far. So far, so good, traders. Remember this, we take this 1 day at a time because the market can change on a dime. Let's look at another chart here. The head and shoulders formation on the US dollar index daily bar chart is now complete. Shoulder, head, shoulder. And we have a target of 7150 when the breakdown comes. It looks like it's going to get there. And if the head and shoulders is truly a head and shoulders and does call for a breakdown, that makes perfect sense because look at the euro with this wonderful bull flag. We're testing the high of the bull flag right now. In fact, we're probably here this evening, Sunday evening, as euro's trading. We are bullish euro. We have a green omni in the euro, a green omni in the S&P. Here is one of the reasons why dollar is bearish versus the euro being bullish, and a big bull flag, one this big, eventually breaks out towards the upside in most cases. So there you are, bullish looking euro, bearish looking dollar, the 200 bar moving average holding the weekly bar charts. You've seen a lot. Let's show you more evidence. V bottom, very likely a V bottom right here. Very similar to the V bottom that we seen back in 2009, March of 2009. E-mini daily bar chart. I think the ES rallies out of this V bottom and follows these arrows higher. You've seen a lot of the reasoning behind that. One more chart to give you reasoning is this. Traders, look at the cheap price of crude. Now understand something. Right here on the top of this chart, the highest you see crude go is $1.14, $114 crude, right? 114 right there. The crude oil right now is trading all the way down here around 86. What I want you to recognize is that the last time we had our break in the S&P in 2009, and it was really a crash, the oil wasn't at 114, it was at 145. It is so high it would never even fit on this chart. Right now, while we're having the same sort of what people are calling pullback in the S&P, they're calling it a crash. I'm calling it a pullback. Crude could not be this cheap and create a crash in the S&P. Crude was 145 last time we crashed. Crude is in the 80s. That does not create a crash. Cheap energy prices are the best stimulus on this planet. This, I assure you, is going to send the S&P much higher in the fourth quarter of 2011. So, traders, you've seen the chart. There is my technical argument for why the 200 bar moving average will be buoyant for the S&P. This is likely a V bottom in the S&P, and I don't think we have a question mark there. The dollar index is head and shoulders is bearish, bullish for the S&P. The euro's in a bull flag, bullish for the S&P. And crude oil is cheap, bullish for the S&P. Traders, I think it'll hold. I think it'll move higher. Now, we all trade with stops. We all know that just because the analysis is lining up and it looks like a perfect storm for the upside, we know that it might not go. Analysis is not 100% right. It is not foolproof, but it is the best roadmap you will ever find to figuring out where the markets will be tomorrow if doing your homework today. That I can attest to. I've done so many of these videos where I've shown you a piece of analysis on this board the day before it happened and the next day it happens. Look at last week. I come out in front of you on a Wednesday and say the market gets ready to hold. Don't get out of your 401ks. We're going higher. And it does. Traders, do you know how many of you attacked me for coming out with that video last week? Do you know how many bad comments and bad letters and disgusting things were written to me? Oscar, you don't know what you're doing. You're so bullish. All you do is stick to an opinion. You don't even know what charts are. Oscar, it's the end of the U.S. Oscar, you suck. And we went straight up just like I said. So you know what I got to say about that? Kiss my OMNI, you guys. Too bad you're not as good as we are. The OMNI Trading Academy is good at what it does, and you are just going to have to kiss my OMNI before I listen to those insane insults from traders that don't know crap about technical analysis, but spew out their opinions on the internet as if they're not going to do any harm to the people who might be listening. You guys are very irresponsible when you just belt out. You're not studied, don't know where you learned this insanity from, and the utter nonsense that you just type out. It's all opinionated. Learn how to use the chart. Learn how to use the things that we use here at the OMNI Trading Academy, and I assure you, instead of sounding like a bumbling idiot, you'll start to look like a real pro. So come on down and join us instead of fighting us. Come to livewithoscar.com. Don't trade alone and allow me to help you remove the opinion and use the charts for technical analysis. All right, traders, I'm getting out of here. Tonight's only Sunday night. We got a lot of week coming at us. We know the markets are volatile. Make sure your stops are in place. If you'd like to learn the analysis the way I teach it to you in these videos, and you'd like to learn it for free, either come to the site, livewithoscar.com, or come on down and see me in Vegas, August 20th, this Saturday, for a free seminar at the Marriott. Traders, thank you so much for tuning into my videos. And I will see you at the site, baby. It's going to be exciting. Remember, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah, 762. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.